Hey everybody, Ramsey Goodrich, managing partner here at Carter Morse with just a quick market update. My partner Terry Hannafin and I went to an amazing, probably the best middle market mergers and acquisitions conference last week called DealMAX, hosted by the Association for Corporate Growth out at the Aria in Las Vegas, Nevada. We had a countless number of meetings with potential private equity partners, strategic buyers, other service professionals, deal professionals from all over the country and in fact all over the world. And it was a pretty amazing conference with 3,200 of our closest friends and colleagues within the M&A industry. So we thought it'd be a good idea to give a quick market update on what we heard and what we're seeing in the marketplace. So the good news is there is still plenty of demand. The private equity folks are still dying to put capital to work. Strategic buyers are trying to address their anemic growth. Even smaller partners are looking ways to improve their bottom line and top line growth as well. So demand side has never been a problem. There's always more capital than deals and more buyers than sellers. So never been a real problem. What we're seeing, however, is that there's still a lack of activity. Despite our best prognostications back at the end of last year that we're going to see this robust market, especially here at the middle part of 2024, we just haven't seen it yet. There's sort of this waiting in anticipation that something's going to break and then everything will come. We are seeing that great companies, A-level companies, are still trading in the marketplace. Those best companies that have really strong management, strong recurring revenue, great margins, great market position, there's a few of them that are coming to market. And when that happens, there's a feeding frenzy, and certainly a lot of folks are chasing them. So that's keeping those valuations quite high for our A-level companies. What we haven't seen, and what you don't read about in the papers, are those level B and C companies that haven't quite made it to market. Those everyone's holding out and waiting to see where the market goes. And so while there's still plenty of interest in doing transactions, there's just not a lot of activity. The valuations are arbitrarily high or artificially high because of that supply and demand imbalance. So the question is, where do we go from here? What happens? How do we get this market moving again? And the short answer is a Fed rate decrease. As soon as the Fed chooses to cut rates just a little bit, you're going to see the M&A markets really flood open. Remember, at the beginning of the year, we thought that we might have up to 6 cuts over the course of the year. Here we are in May, and we still haven't seen any, and much less than that, we're now thinking about maybe 1 this year. So let's talk about the impact of that. What does that actually mean? A 25 or 50 basis point cut in the Fed rates isn't really going to change a whole lot from a cost of capital perspective. Remember, we've come off historically long and low interest rates, and now we're back to a much higher rate. So 25 or 50 basis points really isn't going to change the world all that much from a cost of capital perspective. However, what that does is give deal makers, especially buyers, confidence that we're moving in the right direction. Confidence that the cost of capital will come down, that the economy is going to get better, and that more robust M&A markets will prevail. So that's all good news. When does that happen? We think that's probably going to happen in the Q4 to Q1 timeframe, that you're going to see this flood of deals come to the market. Remember that investors have given private equity a whole lot of money to deploy, most of it for what has been deployed, but still plenty on the sidelines. Now they're saying, you know what, we gave you all that money, you made all the investments, we'd like to have a return now. So go give us a return by selling some portfolio companies. Also we're seeing this building tidal wave of transactions is private owners also have come off of 3 years of COVID and all the ramifications that came with that, followed by a supply chain disruption and commodity price fluctuations that was really hard to manage. And then all this interest rate environment, the cost of capital going skyrocketing. So private sellers haven't come to the market either. But now that COVID's 3 years behind us, we have a more positive outlook now, and things seem to be settling down after a long period of turmoil. We think that family-held, owner-operated companies are going to come to market more aggressively going into the latter half of this year and certainly first part of next year. What that means is activity is going to happen. It's going to pick up. As this tidal wave comes crashing to shore, there will be a lot of opportunity for both buyers and sellers to take advantage of that market. Back in 2021, especially in the fourth quarter of 21, it was a record-breaking year in every single definition of the term, from valuations to liquidity to leverage to activity to number of deals to value of deals, you name it. It's potential that that could happen again here in later 24, early 25, as that flood of deals comes to the marketplace. So I think we might see that. We might even see that quality of earnings provided, legal counsel, and even potential buyers just may say, we're too busy to do this right now. So it's going to be an interesting time frame to take a look at things. So what should business owners be doing right now to either prepare for or get ready for this? Really, it's getting ready. It's preparation. You've heard us say this before. You'll hear us say it again. Preparation is key. The amount of work that has to go into a successful M&A transaction is voluminous. It's a lot. That's why it takes us 6, 7, 8, 9 months to complete a transaction if we do it well. So now you've got the option of really starting that now and start to prepare. Build your core 4 advisory team. Take advantage of low-hanging fruit that's available in your business. Really prepare for a knock on the door, because as soon as there's some liquidity in the marketplace, buyers are going to get much more aggressive. So take advantage of this lull in the marketplace to really get ready, to prepare, to think about valuation expectations, to as we said, take advantage of the low-hanging fruit. Now is the time to do that. Because the amount of work is relatively fixed, it's the same amount no matter how quickly you do it, we find it much more advantageous to start to do it slowly. Put the pieces in place, get a tempo of deal making, get that thought percolate within the management team to really get ready for a transaction, either driven by a knock on the door or a proactive approach to the marketplace. There's plenty of activity, plenty of information on our website that goes into all the different pieces that I just explained: building your core 4, taking advantage of low-hanging fruit, preparing for a knock on the door, preparing for a quality of earnings report, all of which we strongly recommend. So go check that out on our website, or better yet, call us. That's why we're here. We're probably the most user-friendly investment bank on the planet. We love having these conversations with business owners, so feel free to give us a call. Our team would love to chat with you to learn how we might be able to help you as you plan and prepare and ultimately execute your once-in-a-lifetime transaction. So I hope that was helpful. We are going to come into a really interesting period of time here for the M&A markets, and we're here ready to help. Thank you so much for listening, and we look forward to seeing you in our next video. Cheers.